Even if you're not interested in cryptocurrency, you probably have heard about the FTX collapse. It's taken the crypto world, banking segments, and legislators by storm by being the pinnacle talking point about the vulnerability of unregulated world currencies. The collapse of FTX exposes the cracks of crypto and demonstrates to the world the dangers and high risks to private investors in a volatile financial industry. Now, what exactly transpired has yet to be revealed and may never come fully to light, but the broad strokes are that the company has a murky relationship, to say the least, with its trading firm Alameda Research, whose heavy losses founder Sam Bankman-Fried tried to patch up with FTX client funds. What brings us to today's video, where we'll be discussing what really caused the sudden collapse of FTX and how it exposes financial influencers. But before we begin, make sure you like the video and press the subscribe icon. Let's get it on. FTX is a Bahamas-based crypto exchange founded in 2019. Users were allowed to exchange, buy, and sell currencies, as well as buy and sell NFTs. What made FTX attractive to investors was that it was decentralized from National Reserve banks, and one thing was that they were operating without the regulations implemented by authorities for the safekeeping of investments. Another major draw of FTX was that it had extremely low trading fees. The exchange utilized a tiered fee structure based on one's trading volume, and the highest fee amount was 0.20%. So those rates were much better than what many of the best cryptocurrency exchanges charge in general. This means traders of cryptos were able to save money while trading on FTX. Regarding the issue of bankruptcy, it's no longer news that FTX is indeed bankrupt. Sadly for the company, cryptocurrency exchange FTX, which filed for U.S. bankruptcy court protection, revealed that the company owes nearly $3.1 billion to its 50 biggest creditors. Earlier on the 19th of November, FTX, in a court filing, had revealed that it owes about $1.46 billion to its top 10 creditors, even though it did not name them. FTX and its affiliates filed for bankruptcy on 11th of November in U.S. Delaware. No one believed FTX would be one of the highest-profile crypto blow-ups that left an estimated 1 million customers, and the dark reality is other investors are facing total losses in billions of dollars. It's pretty shocking that it's come over the past several days with the collapse of FTX, and I'm sure there's a lot more yet to come. Werbach told Wharton Business Daily on SiriusXM, "In terms of business ethics, this is an easy one. Don't commit fraud, don't steal your customers' money, and don't use it for all sorts of personal ventures." With Werbach's words, he said, "The incident raises numerous questions about what exactly is going on with cryptocurrency exchanges and how they should be regulated to investors." Congress has also been inspecting the issues for many years, and some bills are even pending. However, the issue regarding FTX is most likely to light a fire under policymakers to create a more extensive regulatory structure. Now, the FTX collapse sparked global outrage, and it has now made many crypto influencers expose ex-CEO Sam Bankman-Fried for fraud and placing legitimate cryptocurrencies in bad light. BitBoy Crypto reacted quickly and exposed the fraudulent facts behind the mal-managed FTX collapse. They had to produce several video contents to distance the potential of crypto generally from that of FTX so as to not cause more trouble for other investors outside FTX. Coinbase CEO Armstrong has also garnered much online support from the crypto Twitter space, where he's received different positive feedback from individuals respecting his ventures, but has swallowed his fair share of hate tweets in the same breath. Armstrong has constantly been discussing with his followers on Twitter and posting several live updates. In his recent update, he was live streaming himself while entering the area where the luxurious FTX penthouse was headquartered prior to its collapse. However, the live stream showed showed him and his members being escorted out of the building by security guards. Well, that's not all. Just recently, he has been in an online feud with Kevin O'Leary on matters concerning FTX and Sam Bankman-Fried. In addition, another crypto influencer on YouTube, Gabrielle Haynes, who has over 8.52K subscribers, made several videos regarding Sam and the FTX collapse. In fact, he even crowdfunded $10,000 in Ethereum just to be able to fly himself and his family to the Bahamas. And for what reason? Yeah, just to search for Sam Bankman-Fried. He aims to create several contents that could bring more information and solve some of the major problems and frustration the crypto community has on this issue. So, the collapse of FTX has been severe, and the CEO even took the blame for some of the company's failures as he tweeted, "I messed up." He also said Alameda Research, a quantitative trading firm he co-founded, would no longer be trading in FTX. We can really tell how severe this is for Sam and his investors at large. Another thing to note is that finance YouTubers get offered a lot of money to promote finance-related brands for their audiences. All right, we may tend to oppose the idea of YouTubers getting a lot of money just to promote this news, and just how much money are we talking about here? I mean, indeed, it's going to be hundreds of thousands of dollars. But think about this. Would you want to decline if you had a mid-sized YouTube channel and you have the opportunity to get offers that can literally be tens of thousands of dollars for a couple of videos? Well, several finance channels get a whole number of views and they're making big bucks off of it. So when you're talking about that kind of money, you can expect it to be a complicated thing to overlook. This is indeed a life-changing amount of money we're talking about. Another compounding factor here is that most YouTubers are not yet high earners. Most of them are not yet rich, and that's because a lot of them are young people that have somehow built large audiences in a short period, and they've run up into very high income brackets early. However, they still need to do what they're currently doing for long enough to have a high net worth. So this is the major reason why YouTubers jump into this opportunity, because they believe news like this will definitely trend and make money for them. All these factors make you realize how difficult it can be for some people to turn down these sponsorship deals. So would you have ignored it if you had the chance to promote FTX to an online audience for literally $100,000? Another question that comes to mind is, do you think these financial influencers are doing something that's right? The Australian Securities and Investments Commission, ASIC, has got things right. In fact, earlier this year, ASIC did release an updated set of rules and guidelines that specifically nailed down that financial influences are and aren't allowed, nailed down what financial influences are and aren't allowed to say online. They have also implemented rules that cleared up Australian creators completely. The best thing they implemented was a rule that says, as an influencer, you are not allowed to say anything that might imply a buy, hold, or sell recommendation on a financial product if you are not a qualified financial advisor. This alone cleared things up. One of their rules says, arranging for a person to deal in a financial product such as buying or selling a financial product is a financial service. Whether you are arranging for someone to deal in a financial product will depend on the extent of your involvement in making the transaction happen. So all that matters is for influencers is to be very careful and have the full idea of whatever it is they will create content on. And that's it for today, guys. If you enjoyed the video, do ensure that you give the video a thumbs up and tap on that awesome subscribe button so you'll stay updated with our exciting videos. Thanks so much for watching, and we'll see you in the next video.